Hello, everybody. This is Jake Senziano, host of the Jake and Gino Podcast with my co-host, the multifamily mentor, the coach, chef, father, six, the best-selling author, the G-Daddy, Gino Barber. Gino, how's it going?
Jake, I'm doing wonderful. You want to ask me why I'm doing wonderful?
Oh, yeah, I'm sorry, Gino. Why are you doing wonderful, Gino?
Because I've got a fellow pies on the show. We've got the Giacomo, Gino, and Salvatore podcast today. And let me tell you, Salvatore has got a ton of experience, and he is going to share his wisdom. He's been in the markets for a long time. In 3 minutes that we've been speaking to him, I'm like, wow, this is going to be just an amazing show. And Jake and Gino are here for the ride.
Pretty much Gino's a racist, and as long as your last name ends in a vowel, he'll have you on the show. That's what he's saying. So, here we go. Our guest today has demonstrated a keen eye for successful investment strategies, serving as the current CEO and co-founding partner of Brahman Partners, CEO for Dandrew Partners Capital Management, and authoring several successful books on fund management and real estate private lending. So without further ado, Salvatore Buscemi, welcome to the show.
Jake, Gino, it's a pleasure and a privilege. Paisanos, thank you. This is a first.
Hey, the pleasure is all ours. Let's get to know each other a little bit better. Please share with us your background and how you got started in real estate.
I got started in real estate. That's a long, loaded question. I originally was supposed to go to medical school, but unfortunately what happened was I passed out holding a fibula in the cadaver room between my junior and senior year. It didn't really make me look very strong in front of the doctor. However, this is like in the late 90s, and I really thought I wanted to go to medical school. I didn't, though. Unfortunately, looking back today, is probably one of the best decisions I've ever made, considering where medicine is today as a society, and with AI coming close to really ripping a lot of those jobs out of the industry. And in New York City, I went to college, and I just remember I put in everything I could for the surgeon who I was working with. I put him on a pedestal. He had a beautiful wife, drove an Aston Martin, lived in the building that Gloria Vanderbilt lived in on the Upper East Side, would walk across the street to the hospital. And it wasn't until after I graduated after my senior year where I just wasn't happy anymore, but I had to take like 24 credits and then 20 credits. I came to a realization I needed to confront him and say, look, I don't think I'm going to be able to be a good candidate for medical school. I mean, the grades are there and everything, but I'm feeling it. And he said to me in his very Long Island Jewish accent, Sal, that's okay. I've been telling my brother a lot about you. He just made partner at Goldman Sachs. He wants to talk to you. And then the rest is history at that point. After that, this is back in 2007, I had lost my father during the age of when I was 24 working at the firm. And I made a promise to myself that I was going to start my own fund before the age of 30. And this is after Goldman went public. So there was a lot of the incentives of partnership really weren't theirs, for a young professional. And I raised $30 million from a Park Avenue investment manager, and we basically became the kitchen sink for Bear Stearns. Then I did the same thing. I followed that ex-boss, Steve Mnuchin. He went out and bought Indie Bank. I went out and started buying a lot of private whole loans from hard money lenders. And the epicenter for that was Irvine, California. This was like around 2008, 9, 10. We were talking about this before. And that gave me a huge it gave us a huge, opportunity to create wealth, not just for myself, but I started working with families. And one of the things I noticed was that, and you guys would definitely agree with this, in 2013, we were getting bid out on a lot of stuff by doctors and dentists because the debt markets were back. Everybody was giving signature loans to these dentists, doctors, and what have you, these high income professionals. And they were outbidding me on CVSs, for example, that were in middle America, necessity retail, going back to Moses, had been trading at a 10 cap, and now that they were trying to get like an 8.5 cap. So this is before the pandemic, and I basically confided in some of my families. I said, look, we're not really having a good time here in real estate. We're going to get outbid on stuff, and this is before the pandemic was even the sparkle in anyone's eye. And thankfully, I made that decision. They said, Sal, why don't you just point your guns on us? And a lot of those families were life science families that I'd known in New York, and they were real estate families. They would basically take the wealth and buy high class real estate, and that's how I knew them. What's very interesting about the whole situation is the partnerships and the networking that came after that was very strong, and expanded my skill set to be more of a venture capitalist, doing this for the past 10 years. I know this is a real estate show, but for all the people out there who are raising money for multifamily is a gateway drug for people investing in private direct investments into like venture and things like that. So we wound up having a hell of a portfolio with a few exits. We just had an exit in a company called Sing Life, which was Singapore Life. It's a finance company based in Singapore, and they were bought out by their majority shareholder, Sumitomo Life. And we've had tremendous amount of success. And people who follow me on LinkedIn, I'm always showcasing the portfolio. And Brahman Partners is a culmination of my partner and myself. It's a nomenclative homage to the Boston-based families, the Boston-based co-founder, my business partner and close friend, Albert Ewan, and a lot of the CEOs that we support up there too as well. And we have a very specialized box of how we invest into these things. We're not just looking at anything we don't have a head of acquisitions that's looking to just throw poo at us to see what sticks, right? We don't want a poo flinger, as they say it in the industry. And when we get into these deals, especially because it's real estate, we only work with GPs that have been through two down markets. So 2008 was one. This one hasn't started yet. And going back to maybe the late 90s, last time you saw the acceleration of the yield curve like this. Number two is that I want.
Whoa! Can we stay there for a second? Because
sure.
I've been talking to Gino about that. Like, are we in the first inning or like the fifth inning in this thing?
We're in the first inning. We're in the first inning right now. We're in the first inning. There's just too much. People right now are not really. I think you're not going to see anything happen until after the election. And I think this is what I think. And again, I'm a finance geek. If you ask me who the Giants are playing, I'm not going to be able to tell you. But I'll tell you other things. And I think what the
answer is always Taylor Swift right now, though. So
the answer is Taylor Swift, right? But I also think the answer right now is the election. And if people see that we have a peaceful election, I don't think we will. I think it's going to wind up going to the Supreme Court. But let's just say Donald Trump becomes
regardless, the elections, regardless going to the Supreme Court.
Regardless, it's going to be contentious, but it's going to show if the U.S. is still a beacon for wealth for rich people to still invest into. And that's really the issue today. And I think everybody's got everything on hold. Not a lot of things are moving. A lot of trades haven't really happened yet. Sellers are still, unless they have a gun to their head, nothing's really moved yet. But I think people are waiting to see what happens with the election.
So this is an inflection point for the U.S. right now.
I really think it's an inflection point because the U.S. has always been a great place for rich people to invest. And if that happens, then you're going to see more money come in. And I also think that, being the venture capitalists that we are too as well, wearing two hats, you're going to see an IPO market this country has never seen before.
So what is it going to take for the U.S. to remain the shining city on a hill?
The U.S., I think, has always had some sort of, if you look at it, there's always been some sort of, I wouldn't say fraud, but there's always been in these powerful countries and circumstances, there's always some sort of collusion, right? And I think the U.S. does it great. And as long as it shows that it's not being very explicit about that kind of collusion and it's something where it's still providing confidence and there's more law and order than there has been recently, people are going to really like that. This is always the place to be at. But I also don't think that the U.S. is going to change its position as being the world currency anytime soon. I think, as much as you have, a lot of things happening in the Middle East right now and, all sorts of blockades, all sorts of, people putting out circumstances where, they're trying to put embargoes on these countries, it's not working. And the U.S. is there's still $75 trillion in wire transfers that go around the world every day. It's just, I don't see that transitioning to crypto. There was an article actually on Zero Hedge not too long ago, how people are still laundering money in cash, not crypto, by like 100 times as much. And it's almost like out of the Wolf of Wall Street, but you have these glamorous ladies that are just packing Louis Vuitton steamer trunks full of, vacuum packaged, pounds or, U.S. greenbacks. It's very interesting. Nothing's going to change, but I think there will be a time, where the U.S. is going to have to do something to address its balance sheet. And there's some things to do with that.
So in your opinion, Sal, what does an election look like where we come out on the other side still prosperous and confident in the U.S.? What has to happen in that election for the citizens, the globe, to still view the U.S. as a safe and reasonable place to do business? What does that election look like?
I think it's going to have to look like, obviously like a Trump win. He's ahead in all the polls right now. If you look at the polling and the numbers, which I don't believe, but I think they're used to sort of manipulate and form perception. I've never been asked to be on a poll before in my life. Nobody's ever called me and said, who are you voting for?
So
and I get a lot of calls for like money for candidates, on
It's because
both
they're
sides.
racist, okay? They're
Yeah,
racist.
they are, and they're not calling me for some reason.
Me
Guy in
either, or
Miami.
him. So there's like some kind of weird connection here, right, guys?
Of course, but I think there's a margin that I see, and if it's if you want to try to manipulate an election or something, if you start saying that the candidates are very close with each other, like between 2 and 5 points, that's something that can be manipulated. But if you look at it right now, where there's the gap between Biden and Trump is about 10%, that's kind of hard to change, and that's giving all the keys and clues that what Donald Trump probably will win this election, and they're just preparing the public for it right now. If anything happens outside of that, then that's going to cause a lack of trust. And I think the candidate that can sort of insulate or help with the integrity of the election, I think would go a lot further. But I think that there's a lot more at risk, I think, today, given the geopolitical circumstances, and having someone in the house who is, dad's coming back home, sort of to speak, to take care of business. That, I think, is what the world's going to want to see. Remember, the biggest point, and nobody really knows this, but regardless of all the propaganda going with EVs and everything, we're still very, very dependent upon oil. And if something happens in Iran where they shut off the Strait of Hormuz, that could send oil prices skyrocketing higher, and that's a problem. That's a big, big problem.
Gino, one more thing here. So what I'm hearing is that there's no margin of error. If it's 10%, there's no margin of error. So if Biden wins and there's a 10% lead in the polls for Trump, there's no margin of error there. Therefore, the citizens will go, this is bullshit. I've lost confidence. And then the world loses confidence because they don't think it's a fair and free election. In addition to that, I think the interesting thing with a Trump potential victory would be if he can really set off oil and lower the price, increase the production of oil and energy. I think that is and it's the one thing I don't hear people talking about enough. That could be your best defense for inflation. If you can lower the price of everything, because everything touches energy, that could help more than anything else at this point, because they're already attempting things, with rates and whatnot. And so I think that could get very interesting and potentially, take us from this, we're in the first inning, to, hey, there might actually be a soft landing here. So that's my 2 cents on it. Gino, what say you?
All I was going to say was that Trump had 100,000 people in New Jersey last weekend. I don't think Biden's
tough to ignore, right?
I don't think Biden's had 100,000 people in 6 years worth of rallies put together. I mean, like, that is just, when I saw that, I was like, holy. And they try to diminish it and say that he's boring and this and that. And you can do all that. And I understand that. But it's just, to me, I think people are fed up. I think people who are just normal just want to have a decent economy, just want to be able to put food on the table, and want to be able to be told that jobs aren't coming back. The economy is not growing. We're just stagnating. And I think people can feel that finally. And I'm hoping they cut through that BS. But Sal, you said something early on. You were like, I raised $30 million. I mean, you made it seem as if, just $30 million. How did you do that?
And that was before it was like, that was when $30 million was $30 million, not where it's like it's got cut in half today, right? That's like 60 today.
It's like 60 today. I think just go back on one point. Like, you got to remember, we have to have a vibrant middle class. If we don't have a vibrant middle class, then that's a problem for politics. And this country was not built on or for $10 a gallon gas. I'm not saying it's going to head there anytime soon, but that this country, no country has ever had a prosperous middle class where the price of oil was just too much. And if you look at Europe as a proxy, that's a great example there. Getting back to your other question, I actually partnered with some people who were smarter than I was and had more experience to be able to get this done. However, I did have a lot of doors thrown in my face, saying that there's no such thing. You can't short the housing market, in so many words. And we didn't do anything similar to the Big Short. We were just buying the whole loans. We were not dealing with any synthetics or derivatives or anything. I just want to make clear on that. But still, if you're expecting a downstroke in valuations massively across the United States and housing, we use that as our thesis to be able to do it, and we were very successful doing it. But not a lot of people believed it, and not a lot of people, of course, especially institutional back then in 2007, 8, they weren't really as focused on the workouts or the mechanics of home loans and dealing with residential, tenants as they are now when you have Blackstone that's plowed into the space and some others, although they're in it
Mhm.
for other reasons I think we can talk about later. But we got into it just strictly as a value play because we were buying these assets from the whole loans, and then there was also expense to sort of recover that through foreclosure rights and remedies. So it's a business plan that went out there. It was very successful, thankfully doing it. I'd had some money saved, and things were going right, and I was very happy about it. But man, there were some stressful times where I didn't think that that was going to happen. And you can't build too much of a real estate portfolio by putting together smaller checks from friends,
Mhm.
especially when you're starting out. So when you're dealing with these institutions, they can be a very, very good partner for you if you know what you're doing and you do have the background and experience doing that.
Sal, when you're looking back at 2016 and 17 and you're seeing that you're getting outbid, do you go back and wonder and wish you had bought more assets? Because then 2020 comes and then everything explodes. Or do you like, you know what, it passed, it is what it is, and I'm moving on with my life?
I mean, everything exploded for a few people in 2020, but I do know that there were a lot of New York City families that got wiped out because of the change in tenant laws. So, while it was a boon, I think, for other people who were just getting into it because they had the market forces, winds at their backs that were, 100-mile-an-hour backwinds, with low interest rates and excess liquidity being flooded into the system, it was hard not to make money there. But also, you have to understand that that also changed the entire landscape of what we're seeing today, and that really worried a lot of people. We have some office. Look at New York City office right now.
That's what I was going to say. Office and retail is a different story if we're talking multifamily. So it
Yeah,
depends what you're.
yeah.
Yeah.
We're looking at, we're sort of like, flirting with, to be honest with you, a Wall Street office, Class A, 75% occupied. The problem is it's being sold for half its price, and I don't think that's low enough of a basis, right,
Huh.
for its last trade price. So we're
We've seen a
talking,
lot of things that were going over 100 million and are selling for 12 million right now.
yeah,
So
this is New York City though. This is in San Francisco, which is a whole different, whole different circumstance and environment.
So when you look at 2020, you said the landscape was changed. In your opinion, what was changed about the landscape?
The pandemic, you had very low rates, right? You had a lot of liquidity. Banks were just looking to get money out there. And people were panicking. There was a lot of emotional driven things. And now look what happened after that. When we have to pull out that kind of liquidity, Powell's cranked rates up by about 550 basis points, right, Gino? Now, people who didn't understand bond math and now realizing how the real world works, and you can't just buy it and bet that. And we've seen this before. There have been many promoters who have been saying, oh, well, I buy off the pro forma because rents are always going to go up. No, they're not, because Class B, Class C guys are now stretched to the limits with inflation paying for 20 to 100% more for things. Unless it's an iPad, their food prices have gone up. Everything but the price of an iPad seems like, that has gone up, and that's caused a tremendous amount of stress. And so you're starting to see people move from Class A to Class B, homeowners to Class A, which are better for renters, right, or for
Mhm.
landlords in multifamily, and everybody's just going down a rung. I don't think that's great for the economy, but that's sort of the issues that people are forcing with right now. In multifamily, especially, there's a lot of capbacks, but not enough NOI right now, and
Yes.
that's become an issue, and that's always been a very traditional high expense ratio as sub asset class, right? Multifamily. But I just, it to us, it's not something that we've gotten into. I'm sure there's a basis for everything, but when you can't control the cost, sometimes that becomes much more of an issue. And I think, there's the political, risk too as well. If you own something in New York, are you going to be able to evict people out as fast as you do in Texas? And that's why you're starting to
we
see.
actually pulled out of Kentucky because it started to go that direction during COVID, and so we are like that Kentucky line southeast
Yeah,
primarily, and what you see though as well is that because syndicators go in and they're looking for a 5-year hold on average, we'll just for whatever it's worth, we'll say that they're not looking to strengthen the asset in terms of its physical condition. They'll do what they have to do, but everyone knows it's lipstick on a pig. Whereas Gino and myself, we are buy and hold investors. So we're looking to do things for the long term. So up front, it's going to cost more, but we may raise more on the front end to strengthen the asset for the long term, which ultimately you're going to pay a little more up front, but can help your returns and your longevity as you hold. So that's one of the things that we've done to help offset that is we're attempting to catch on the front end so it doesn't become this capex tsunami death spiral that we've seen with so many of these operators.
Well, I think that, you have to understand, like the loan sizing and the pricing and everything for that necessitated or was the primary driver for these guys doing 5 years as compared to you going out 20, 30 years, right? So if you got a 5-year loan, that's your 5-year term. So that's your deal right there.
Yeah, it's fixed rate debt, and when we're looking at things, we're not just we're going to go in and say we're going to paint the brick. Well, it might make it look nicer, but there's issues that go along with that as well, and then it's going to start to peel, and moisture is going to become an issue. So a lot of these things that these guys are doing are not helping the asset over the long haul.
They're
So
weak, inexperienced sponsors. That's what they are. They're weak, inexperienced sponsors. They're using floating rate debt or bridge debt because they had to make the numbers work somehow. I mean, they were doing deals that I would never do, like a value added deal with a delta between going in and exit and a cap rate of like 62 basis points. I mean, that you're threading a needle. There's no room for error there. My general rule is 200 basis points.
well,
And these
they
guys
were
are showing
20% year over year rent growth. These pro formas that we're looking at, and then they didn't factor in the debt's going to reset, insurance is going to skyrocket, labor is going to be a problem. All these things. Oh, guess what? Taxes just went through the roof. So the first 6 months everything was okay-ish probably for them, and then the shit hit the fan.
So Sal, let's go back. Let's go back to when the Fed said inflation is transitory. What did you think of when you heard that? And did you understand, or did you know at the time that they just had to shock the system by raising rates 11 times, the quickest in history? What were your thought process there, and how were you, gearing yourself up to invest when you heard that news?
No, it's a very good question. I think if you were to look at the predecessors before Powell, you had Bernanke and Yellen, and they were both ivory tower academics, and they look at data, data, data. If you look at Jerome Powell, he's a former deal guy from Carlisle, and he's going to break a few backs to get things right and ready. Biden's probably going to take the grunt of it as it relates to, the economy or anything coming out of this. But I think he's doing what he needs to do in order to make sure that, there's not so much problem. There's not so much a problem with inflation anymore. It becomes much more of an issue of, reining that in so that America still is the safest place for
It's
people to
making the
invest.
Fed look independent right now, because I thought for sure all of a sudden there was going to be these rate cuts prior to the election because there was an election. And I didn't want to believe that, right, to be the case, but to see that the fact that it's looking independent right now makes me feel good as a citizen, ultimately.
Well, it makes the world feel good as a citizen
Yeah.
too, right? So if you're an oligarch living overseas and you have $10 million, you're going to be able to put it here in the U.S. knowing you're not going to lose value,
Yeah.
right? You're not going to keep it in your home country of like Guatemala, for example.
But my question specifically, Sal, was did you believe that it was transitory, or because I'm driving around with Jake 3.5 years ago, I'm looking at used cars, I'm looking at lumber, I'm like, this is not transitory. Inflation is finally here. And I think anybody who understood, maybe if they could buy a really good asset for the long term, inflation is going to help them with that when you're getting lower rates. And then all of a sudden, things completely change. I remember used cars were going like 20 grand above what the hell they were getting.
I made money off of it. Yeah. I made money. I sold one and I made like $5,000 off of it. I mean, I never thought you make money selling a car, but I did. And I agree with you there.
It dropped like that.
Yeah, and then it dropped. Yeah. The liquidity just dried up, right? The liquidity just dried up because a lot of these guys that provide these loans, they're either, and get back to your question, Gino, not to get off on tangent here, but I believe it's not transitory. I think they think it's transitory in a way where it's going to come and then it's going to go away at some point, but I don't think that's going to be the case. I think there's also going to be what people don't understand, going back to what we talked about before, is that there could be what we call massive asset inflation. Think about it. If Trump gets into the White House and rates are still high, people are going to say, all right, we want to buy a U.S. asset. We want to buy IPOs. You're going to start to see the stripes go public. You're going to see Starlink get spun out from SpaceX. You're going to see a lot of that happen. And so asset values naturally over time are going to go up. Is that going to affect other asset prices? Probably not as much as what we've seen so far right now as far as the inflation, but it is a good proxy to use as to the health of your country. And it's always a great place to be, where rich people want to be investing. I've been in Miami for almost 2 years, and I can tell you, there's a lot of money here from all over the world. And it's just, the networking is amazing, but it's just really interesting to hear different, sites and, murmurs from people who are overseas who are not politically correct telling you exactly what they feel.
Where do you see the biggest influx coming from, though? Is it New York or California?
Influx of what? People coming to Florida?
Rich people coming to Miami specifically.
Rich people? No, it's global. It's global.
Yeah.
It's global. All the New Yorkers are here. Yeah, the Californians came and then they left. They didn't deal with the humidity very well. It's a different. It's true. No, I've known two people who moved back to California to LA now. I don't know why, but California is a different animal in and of itself. If you think about it, I mean, they have like Venezuelan social policies, but they've had Chinese like growth, which have allowed them to float out of all their problems until now. So now we're going to see what happens.
The weather matters, right?
Yeah, the weather matters.
Let's stay with California, though. So you're saying that they've had all this growth and now it's caught up with them. How do you know that it's caught up with them, let's say? And it's interesting that people go back. It's like you finally escaped. It's like that Godfather movie. They pulled me back in. I mean, what's wrong with you Californians who leave and go back? Go to Tennessee. Go to the mountains of Tennessee. It's just amazing. When you go there, it's like, wow,
It's not
okay.
the same culture. It's not the same
Yeah,
culture,
yeah,
Gino.
I know.
You're from California. It's part of your DNA. It's your identity, especially if you're a young female there. You're not, the only place you're going to move to, maybe temporarily, is New York City, just to sort of see what the other the other world is like. But California is beautiful. I love it. But we did business with a family office, and we have a great industrial product that we've done with them. I've not been in California in over 2 years, but they're headquartered in Southern California. The asset is located in the in the state tax-free state of Nevada and Las Vegas. It's an industrial. I'm in the state tax-free state of Florida, and I received an invoice from this California Franchise Commission wanting percentage of our income that was generated off an asset that was in Nevada where they don't have state income tax. I'm in Florida where they don't have state income tax, in California, and they're a force to be reckoned with. Any of your listeners who know or unfortunately have done business in California knows how prohibitive it is, and nobody really wants to deal with it anymore. It becomes.
So they're really reaching at this point.
Yeah, they're overregulated, I think, and unfortunately,
No, but they're like trying to create state income tax in other states. It sounds like
that's what it is. Yeah, and
did you just send it back with the finger or what?
No, I did not. No, because I did my research and I talked to a few guys, and they're like, they'll reach into the account and grab it if you don't pay it.
Yes,
So
you got to be careful.
Why did you have to pay it? I don't get it.
because because it's being generated from a company that's based in Southern California.
Gotcha. Okay, I gotcha. Okay.
And if you decide to like leave the state and you have business, just be careful when you're leaving because they can tap some money off you as well. Because people are, and that whole, you have to be very, very careful when it comes to that. So
that is disgusting. I don't care how great the weather is, honestly. Like I don't, I can live in Miami. It gets hot and humid. I understand that. I can always go to New York for less than 180 days a year, but you better have an app on your phone that tracks that.
Yes. Sal, where do you think interest rates are going to go in the next, 6 to 12 months?
I don't see. I wrote this in my real estate letter that I'll send to you guys. It's kind of lengthy. I sent it to my investors. It's on LinkedIn, but I will send it to you. I don't think anything is with interest rates would be seen, I think, as being, if they were to lower interest rates before the election, I don't think that's going to help anyone. It's not going to change the distress that you're seeing right now. It's not going to change.
There's a lag
banking.
there. It's going to take a minute,
Yeah,
right?
it's going to take a minute, but it's not going to be enough to people to be like, oh my gosh, my credit cards went from 20% interest to
Bidenomics is
19%
working.
interest. Yeah, I'm going to vote for Biden again. I think it's just merely cosmetic. It's optional but not mandatory. And I think, go ahead.
No, I'm sorry. I had a real thought. I think you're really intelligent and you really understand the markets. Do you think it was political back in 2022? They didn't raise rates before then when they should have because of the midterm elections. And now they played the short game instead of playing the long game. No one has ever given me an answer to that question. Maybe nobody wants to, or nobody's ever really thought about it.
No, I'll tell you, they played the short game. They did. No,
Okay.
They absolutely did. Yeah, I agree with you there. No, everybody knows that because now everybody's suffering, but it's too much. It's too late.
No one said it. No one said why 11 times so quickly, and no one's really said they really shocked the system. Because if they had done it before, we know a lot of operators that would have bought rate caps or would have had a little softening of the blow. Rates, they wouldn't have been buying stuff at 3%. Maybe it would have been 4.5 or 5. So 5 goes to 8, and you can still weather it a little bit. But I mean, they shocked it so quickly, and nobody wants to say why. It was totally political. And if they had done it sooner, he would have lost the Senate. He would have lost the House. But then again, would have slowed it down. We'd be coming out of the crap now. And as this election is coming to play, things would have been a little bit smoother, and it would have been a lot easier for him to get reelected at this point.
Yeah, Gino, you're right, and I also think that that's going to cause a contraction and a consolidation between the just over 4,000 banks we have now to between 1,800 2,500 in the next couple of years once things get going. We're further down in the innings. Oh yeah, absolutely, I think so. And it's just it's the way it is. So there's a lot more to it than just the operators and the real estate guys. Remember, the people who vote are not real estate owner, operator, syndicators, or GPs, right? They're people who have different alignment of interests and different life circumstances, and they vote the way they are. But I don't think Powell's worried about covering the ass of a first-time sponsor who's losing his, who's losing his ass, because he didn't know what's going on, and going to have many awkward Thanksgiving conversations to come, with friends and family. But I think, that's just.
I love your authentic, transparent answers, because even if we get people on sometimes that are so skittish to even like touch on politics and say what they believe because they're afraid of like getting canceled or whatever, like letting people know who they really are. And it's look, there's an intersection between business and politics, and this stuff needs to be unpacked.
It's a huge intersection, bro.
I really appreciate your transparency. No, I do.
And that's one of the reasons why I think Blackstone's been buying all these homes all over the country. It's not because they want to take over the world and make everybody turn it into a rentier society. I think they're doing it because they understand that it is getting increasingly more complex with regulation to get houses built. Right?
Yes.
It takes twice the amount of time. So we call that regulatory inflation, right? And that's a bottom line that a lot of people don't have on their balance sheet as relates to, people. It's always what you think, the financial press is looking to scare you like anything else, into thinking you're going to go broke or you're going to miss out on the next, meme stock. However, but when you look at it from the other side, you sort of see, well, they're probably doing this because it's a bet that the inflation is not transitory and is going to be here for a little bit. And and how do you play that? Through housing.
And it gives them a stable long-term yield as well, to balance, their other investments. Sorry, Gino, what you saying?
No, Sal, before we go to the short answers, where do you see yourself investing in the next 3 to 5 years? What assets are you really looking at for the long term?
We're going to be going into cold storage. We're going to be probably going into industrial, more of that stuff at a good basis, of course. I also see us doing maybe something, maybe a little flashy in New York real estate, as far as buying a distressed, office building. I wouldn't say distressed, but at a low basis office building. But I think it's going to be more going towards other things like, we're in the middle right now negotiating a partnership with a family for a mine in Nevada. My partner has a lot of experience in mining, coming out of Rockefeller and doing a lot of that stuff. The other thing, too, is that we'll probably be hitting, and we've already started this, and I intimated it in my book, Investing Legacy, how the 0.001%, professional sports teams, too, as well, because they're insulated. They have very, very strong brand insulation. I mean, you can't wear an NFL bag, without, that you made without getting, the snipers coming out of the woodwork shooting you down because you have an, unauthorized, unlicensed NFL product. And also, I think other things, too, where you're, the way we invest in real estate is different than how a lot of people who listen to this invest in real estate. A lot of the families we work for are very wealthy, or we invest on behalf of. So they have operating companies or money. They're wealthy already. They're looking for a store of value. They're not looking, to compete on a cash-on-cash return with an industrial that might have been, underwritten at a 7, now it's giving you an 8 cap compared to the 12 or 13 cap that your brother-in-law promised you in Cincinnati with a Class C apartment complex. So they they don't want the risk. They're looking for just a store of wealth, simple, so that they can do this. A great example of this is if you ever heard of the founder Amancio Ortega, who's the founder of Zara and all those clothing brands. He spends probably on the last real deal I read, he spent $1.3 billion in cash in real estate last year through his family office. So that's what a real family office does. So we're very opportunistic, but we're very, very very structured and guarded as it relates to going into these deals. And we have 3 rules that we follow. I can talk to you about if you want. When we invest in these GPs. Number 1, no first time GPs. Obviously, we talked about this. I want them to have gone through at least 2 cycles. Number 2, I want audited financials. If you're so good before in the past cycles, why didn't you get your financials audited? Okay. And number 3, a meaningful co-invest. And this is where everybody gets gamey. 5% is cute, 10% is thoughtful. Anything else shows, conviction. And that's what I like going into it. I don't like
Bring
it when they
it,
wrap the
baby.
Chiefs
That's
in.
right.
Yeah.
Put some skin in the game. Don't give me your pro forma bullshit, and have some experience. I don't want you learning on my dime, right?
No, it's true. And it's like, to me, yeah, I'm not, but you're a family office. I thought you invested. No, we don't have to invest in anything we don't want to, and that's, we're very,
And
very
don't
discerning
whine, you
about
little
that.
bitch. Like,
I
seriously,
know.
I'm
Well,
gonna be crying.
I just tell people, like, LinkedIn's full of like the whole multifamily thing, right? So everybody's like sending me over, like,
It's
I'd like
Gino's
to
fault.
talk
He
about,
created that.
yeah.
Hey, Sal, don't rip on it, though. I met you on LinkedIn, and I connected with you on
I
LinkedIn.
know, but every day I get like, now I know what like these OnlyFans feel like when they're getting nudes of guys. Like, I was kind of like, hey, here's a deck for a deal. It's poorly put together. The grammar's awful. It looks like it was put together in like Microsoft, 95 Windows, and I'm like, how do I do it? Well, I'm I'm, I'm like, first of all, you have no picture on your LinkedIn profile. You're a former computer programmer. How are you going to be able to negotiate with people in real estate who are not the nicest guys in the world?
This is
You're
rich.
dealing with the pinky ring crowd at that point, and it's a whole different circumstance, right, gentlemen?
Yes,
I love
I
it.
agree.
Guys, let's take a quick time out here from our sponsor. Now, we have had a great run in multifamily, going from 0 units to over $250 million in assets. That's over 2,000 apartment deals that we've been able to purchase through our framework: buy right, manage right, and finance right.
Now, Jake and we created the Jake and Gino community back in 2015. We launched our first book, Build Our Profits. And since then, our students have closed over 60,000 units. That's over $4 billion in assets they've been able to close over the last 6 years.
And that's why this community has been so successful. We call it results-based education, and we pour back into the community everything that we've learned on our journey from 0 to 2,000 units, and all our systems and scale that we use on our very own property management and investing companies.
Jake, I love that. It's not just education, it's implementation. So what I want you to do, click on that link down below, apply to work with our team, see how we can help you on your journey in multifamily.
All right, we are back. You mentioned a sports team potential investment. Let's talk about the dynamics of some of the things that happened in the NFL last year. So, do you believe that the Taylor Swift Travis Kelce relationship was prearranged and made up? Because there's a lot of money at the end of that rainbow.
I knew you were going to ask that question.
Me being cynical at best and paranoid at worst, I have this follow the money, mantra.
Dude, I'm with you. Brother from another mother. Here we go.
Yeah. It's not, there's a higher likelihood than over 1% that there's a financial incentive there. I don't think it's purely necessarily on love. I think,
Platonic.
money. Yeah. I don't think it's
The love of money.
Yeah. The love of money. That's what it is. But I just don't, I think, through a well-timed, they're smart. They're both very, very good marketers, right? You have a meme of Taylor Swift of her yelling at Travis
they have good
Kelce.
agents potentially that
They have
set this
good,
up.
very well-paid agents. Yes, very, very well-paid agents. And so I don't, how long will it last? The timing of it, I believe there's always some sort of a financial, those kind of relationships always make strange bedfellows, right? And she's at the top of her game. He's at the top of his game. Why not? If it was Tom Brady, I bet you it would be the same thing, right? I bet you it would be even, and that would be even worse, right? I mean, that would be even, more money, but because of Tom Brady, the GOAT is now with Taylor Swift. She's a GOAT, like, and that just it actually, it's great for the NFL because it brings in sort of like something that mom, that father, and not so much father and son, but father and daughter can relate to when they watch Sunday football every day. It's like, hey, Taylor Swift is dating this person. Dad, you know this and that and everything. So the NFL is smart doing it. You're going to see them do a lot more of that, I think, because I think it's, this is a level of showmanship. It is. It's entertainment.
It is. 100%.
It's the WWF, right?
That's the WWF. But if you think about it, they're doing the same thing that CNBC did with Jim Cramer back in 2002. I mean, he turned the whole stock market into day trade. He just turned it into WWF, right? It was like pound it, this, that, the other thing. How he's still alive.
That guy is so wrong all the time. It's just
amazing.
amazing.
How he's not at the bottom of the Hudson with cement shoes. I really don't. I really don't. I don't
either.
I mean, he's got to have a security detail, and but he's one of those guys. And he just ramped up revenues for Charles Schwab and all the discount brokers and consolidations because it made it fun. He even changed the desks.
It's
You
those
know,
Louis purses filled with greenbacks that get sent his way, right? That
yeah, no,
he can afford a security detail.
yeah, exactly. Like, I just don't understand it. Another guy too is Scaramucci, but that's sort of a whole other circumstance at that point.
Yes, yeah, that is. Yeah.
It's a
So
whole other.
don't quote me on this. I think the brand value initially in the relationship to the NFL was worth $300 million. So it's and then I'm sure it trickled down from it. And then you even see these wives of NFL players making like Taylor Swift's clothes now. So it's good business at the end of the day. So
Yeah, you're light on that. You're light on that number because if you look at all the Instagram, all the clicks and all the views and stuff.
It was early, and I don't know if that whatever, but I was like, that's quick though, right? Like
It's created its own industry. It's its own cottage industry of the NFL.
Mm-hmm. The reason I'm bringing it up, if you're going into that, if you're going into sports potentially, just start thinking down the road and brand value of who you can pull from like these, these influencers to recreate that in your world, right?
Yeah.
I think, that's kind of where we're going with that. All right, we're going to go back to the folks now. You started off, you thinking you're going to be a doctor and all this.
Yeah.
We're speaking to the real estate crowd. They're raising money. They're getting started. You got someone coming to you asking for money with a pretty crummy deck. They're not doing it the right way. Give folks a little bit of a framework, or if they're entering the space to start raising money, how to professional up. Maybe a few quick tips on the way to do it right in the beginning versus some of the garbage that you're seeing on LinkedIn.
Here's what I would do, and this is something that I think AI is not going to be able to take away from you ever. And that is the ability for networking and salesmanship. Okay. If I was just starting in this business right now and I've been following you guys and I see that there's opportunity, I would spend a disproportionate amount of my time doing two things. Number one, aligning myself with a GP who's had experience, who you can who you can hitch your wagon to under the sole pretense that you're going to be working to raise him capital. That's it. Because when you're raising capital for someone else and not yourself, it becomes much easier for you to learn and build a leverageable track record off of. That's not, if you're going to go out there and you want to do it yourself and you want to knock 10 and you want to deal with the GCs and, giving them money because, the baby mama had them arrested for not paying child support. Life is too short for that. And it's really too short to do that. There are people who are going to want to do that, and that's fine. And there's a lot of people who have a lot of residential experience doing rehabs where it's a commensurate skill, but it's not the same. But if you go out there and you're talking to people and you're able to successfully market and sell other people's deals, that is the highest and best use of your time. And I'll just tell you, when I'm not having fun with you guys screwing around on your show, I spend about 50% of my time talking to current or new investors. Not that I have anything to sell them, but just to tell them what's going on. You get our emails, maybe you don't, I'm not sure. But we invested in a company called AI Scout, which has been used by it's a AI, of course, app that coaches use to be able to recruit players from around the world. The NFL is signing with them. There's a lot of other things. And Intel, they opened for Intel's keynote. The reason why I know a lot of this and why we're getting into sports is because of the network that I have investing into this deal. If I did not invest in this deal, I would not get the invitations to be able to invest in certain asset classes like that. Does that make sense? So it's about the network. You've earned the right
to be in that space. Yeah.
Yeah. I think if people are waking up, they're like, oh, I need to do something. If you build and you really put the time in, and it's not a lot of time to just connect with people with authentic relationships, you're fine. Also, I put a guide together when I first moved here because outside of real estate, people had no understanding. And I think it was sort of a consequence of the pandemic that people became very transactional. And this is a relational business. Like you are asking for marriage, like you are. When you're with a partner, you're asking for marriage. The good, the bad, you're going to ask.
The values need alignment.
Yeah, exactly. Yeah, alignment of values, alignment of incentives too. But when you're talking to these people, nobody's going to give you a check without giving you their time first. And so that's why people still are on, they're on Zoom shows all the time. They want to meet you. They come to town. It's great for me because I don't have to go anywhere. They come to me. Although I do go to some, certain types of events and everything outside. I'll be in Salt Lake City at the International Trade summit or something. I'm not sure, later this month. But you got to go out there and make the effort to build the relationships. And I think that's something that a lot of people have sort of forgotten about, is that this is a relationship type business. Social media has made it easier to connect with people, but not to really build anything meaningfully.
Love that.
Yeah, well said. Any book recommendations or podcasts or anything that you've consumed, in the last year or so that you want to share with the folks that's added value to your life?
Yeah, I think some friend of mine a long time ago turned me on to Alex Hormozy. I think he is wonderful when it comes to business, and anything that he does can probably be applied to raising capital, talking to people, building the relationships, being present. At Goldman, we used to call it coverage banking, which is, call your clients. If you're not calling your clients, you're fired. Like, what do they need? Oh, you got to talk to, Gino and DCM. He'll hook you up with some fixed rate leverage or something. Yeah, hold on. Let me get Gino on the phone. Like really being someone who can help. And I, when you look at the world that way, when you're building a relationship and not like Gary Vee, it becomes much more easier to be, you see success. And I think people try to
you said, and not like Gary Vee.
Yeah, not like hustle here. Does that make sense? On the
Toward
transactional
the
side,
relationship.
Yeah, towards the relationship. You got to have bedside manners. Okay, that's what I mean. You can't. I got this deal. You want to invest now? No, you just nobody. That turns people off. There's a story behind every deal.
Well, you don't want my mom's used scarf for 15 cents at the yard sale? Piss off, bro. Right?
But he speaks to a different demo. Yeah. I mean, he speaks to the public school kids, right? And so that's the
transactional gig economy that he speaks to.
Yeah, the transactional gig economy. But if you need $100,000 or $1 million for $100,000 or $1 million for one of your opportunities, it doesn't happen that way.
It's a different conversation, I guess.
A different kind. Do I trust this person with my wallet? And that's what these people are going to be thinking of the whole time. How they look at you and everything. And then the second one I put together too as well, which helped a lot of people, was I put together a guide. It's available on Amazon. It's called Calling the Capital. It's only 24 pages with 20 case studies that I've used to call capital for deals and how I've sold these deals without sounding desperate, salesy, or cheesy. And it's a guidebook, and it works out really well. You can get a free copy if you go to callingthecapital.com. That is a book that I put together after I'd been with too many hustlers and Gary Vee disciples, where people are like, well, how do you do it? And I put it together in a way. For example, there's a story.
Callingthecapital.com.
Yes, exactly. There's a story of a company called AI Scout that I'll be posting about later that just released some great news. And it was August 2 years ago, and I was in New York, Eastern Long Island, and I got in a phone call that there was $1 million slug to invest in this company, and I had to close before Labor Day because one of the other investors didn't commit, but it was behind a world-class investor that we wanted to be in, who had done this before and had started, had owned, been seed investor in Fanatics and all those other types of online companies. And I said to myself, I'm like, holy crap, how am I going to get $1 million in August? Like how is that going to happen? Am I going to bridge people? But even then, that's,
you're going to go to a beach somewhere.
Right. So here's what I did. This is interesting. And this is something who's raising capital. You got to always think about what it is that you got to appeal to the emotion of it. You're going to love this. So David Bowie had just bought Chelsea Football Club from Abramovich, who was the Russian oligarch who was under pressure to sell that team. And he was also a big investor too, not the investor, but a bigger investor in AI Scout. And I said to the CEO, I said, do me a favor. It's August. Everybody knows nobody doesn't work in August. We really want to be a part of this. However, we're structured a little differently. We have to go out there and give the investors, the families, the discretion. If they like what they hear, they invest. Okay. So I said, can you ask Todd that for every investor that comes in through us, we're going to have a minimum investment for $100,000, that they would all get signed jerseys by the entire Chelsea Football Club team. And he said,
dude, that's
yes.
Brilliant.
And it's in the book. That's
brilliant, though.
Here's the secret. Nobody likes me to say this. So we had like 20 people come to us. We took the first come, first
That's
serve.
Going to the concert and get free VIP backstage.
It is, but they were also thinking about it. They were thinking about, and I went to one of the investors' houses who was in, Southern California, and he had the jersey like behind plate glass, like he had played on the Rangers, and won, and like, I got the original, Messi, jersey from, Miami or whatever. And it was great because to them, None of those guys. None of those guys clicked one. We had like one click who I knew, I always knew there's always that one
That
person
actually
who clicked
looked at
on
the
the data
details,
room.
right? They just went for the fucking jersey. I knew it.
$100,000 for a signed jersey. What does that do? Oh, it makes me look like a stud. I am definitely going to invest in this deal. And I just give them good deals.
I bought the team. I got the jersey. Now I can show my asshole friends that I'm cool. That's it.
Yeah. They're like, well, how? Because it makes you look sexier, smarter, more sophisticated, and better connected, right?
Yeah. So there's value in that, but
that's all the value in that. Yeah. For most investors, that's all the value is, because they're getting pitched on numbers that they'll never receive. But if they have a jersey and the story behind it, or numbers they can't remember, Nobody remembers nobody remembers their own biometrics, right? But everybody remembers the Star Wars trilogy.
Yeah, time out. This is so important because you're creating a narrative, you're creating a story, and you are actually listening to the people that you're working with. And Sal's got results. I wouldn't try this if I have 0 results and I've never performed. So Sal is saying, I have the results. I just need to get people's attention. I've got this amazing opportunity. They're out in the Hamptons in August. No one's listening to me. How do I garner attention? There's so many ways. But you need to create a story. Like you said, there's a croc brain, like Oren Klaff says, and there's a neocortex. You're hitting the croc brain with the jersey, and then all of a sudden that allows you to hit their neocortex and go, okay, let me look at the deal. Oh, I like the jersey.
It's
the
fun
deal's really
plus
good.
money. I'm in. Yes.
They're not thinking about the deal. Like, they were just tell me about it. Like, these are guys who are very, very wealthy, but it's the sign of trust as well. But if I didn't have the jersey, they didn't understand it. But what we come down to is the most important thing. And Gino, you hit the nail on the head here. There's only one asset that is more precious than oil today, and that is attention.
Yes. Love that.
Think about it. We were talking about 300 million added to some global GDP because of, Travis Kelce and Taylor Swift. Why do you think that that's so important? Because it's more attention. It's more attention on TV at night. It brings in attention from everybody's daughter to watch Travis Kelce. And the body language of Taylor Swift in the suite.
All right, we're gonna go quick here, but we're gonna pour into the relationship, as you said. So, favorite car that you've ever owned and why?
I had an S550 Coupe, the 2-door, 2017. It's the same body style that's out there today. I absolutely loved it because it was big and safe. I was living in Las Vegas at the time, but also, it's just a very sharp car. It's not anything, your investors want to know you do well, but they don't want to see conspicuous consumption.
You don't want to do too well.
Yeah, I'm not going to be screaming around. Yeah. And, they don't want me screaming around in a cherry red Porsche. They'll think I'm picking up bottle service girls. Whether or not that's the case or not is really none of their business, but we just don't want it to smell that way. Does that make sense?
You got to have a little bit of class, but not be competing, right?
Yeah, exactly. So the S-Class, that's fine. That's just really...
Might have a driver, might not, kind of look... Yeah, I got you.
It's fine, but it's just, it's respectable, it's presentable. So I like, that's what I like.
I could give money to this guy, he makes me feel comfortable.
Yeah, but if I start rolling in like a, Lamborghini SUV... in, canary yellow. What is that? Does that really say anything?
My wife probably shouldn't raise money then, is what you're telling me.
No. I've seen that too. Draped in jewels and like everything. I'm like, where's the money going to? I can't wait to see what the fee structure is on this one,
I feel so gross right now. Best vacation spot?
I really like Maui. Before the fires, I haven't been there, but I love going to Hawaii. I love going to Maui. The only thing about it was that it gave me anxiety because it was 5 hours behind everything, in New York. So, I was able to enjoy it. And remember, we're in a globally interconnected world today, so it becomes kind of, prohibitive to break away from that. But I loved Maui, and those are the type of places that I like to go to relax, and you can have a lot of fun and. You can do other things rather than just sit in a hotel bar and drink all day, which is what a lot of people do. So, there's a lot more activity there. I drove the road to Hana. I didn't really like it at the top. I was sick, but I did it. It was something to do. But it was a fun time,
And then next question, I'm going to guess about 275. You look fit, but what are you benching these days?
I'm around, my max right now is probably about one. I'm a little older than you guys. So my max right now is around probably 175, only because I've had
Gino's like 350,
issues.
so he's like, you wouldn't think it, but he's like powerlifting. Yeah,
he's powerlifting. Oh my gosh! No, I like strength training. It's my, I like my favorite day is leg day. The days I don't like is back day so much. It's just, it's how it
So
is.
you put them together. You combine them.
You combine them together. You put them both together, back and, leg day. And then you're walking like an ape home from the gym, down Brickell Avenue, which is absolutely amazing. I've been there before. This has been a great conversation. What else do you need? Go ahead.
Just give us the website one more time. Gino's going to take us home.
Yeah, absolutely. If you want a copy of the guide, callingthecapital.com. You'll also be onboarded onto our multifamily office. It's callingthecapital.com. How to raise money without sounding desperate. Enough so that you feel confident asking your friend for money, really, because that's the hardest thing I think in the world that people don't have is the confidence to ask people for money. They're afraid. There's a lot of fears there, and that separates, the men from the boys and the women from the girls, is being able to raise capital. And remember, the second rule of real estate always, and a lot of people don't understand this, and it's something that, if I had a tattoo, I would get this tattoo. The first rule is location, location, location. The second rule is always be raising capital. And if you remember that, you'll be successful no matter the market.
And the third rule is you can always buy, you can't always sell. That's the third.
That's true. It costs more to exit the fire theater, the movie theater when the theater's on fire, right? You have one of those doors jammed. It's either a refinance or a sale. Yeah. You're like, uh-oh, we're in that fire. The door's jammed right now.
We have a young Salvatore Buscemi who's going to medical school, and in his junior year, he passes out. He's like, this is not for me. I got to get out of this thing. He meets his Jewish doctor on the street, and he says, I got to have you talk to my brother. He ends up leaving medical school, goes to Goldman Sachs, and nonchalantly says, I raised $30 million in my first deal. But what he did was he used other people. He was intelligent enough to use other people. And that's one of his tips today. He gets into real estate. And in 2016, he's like, I'm getting outbid here. I don't know what the heck is going on. So he pivots, goes into family offices. And then one fortuitous day, Gino's on the computer on LinkedIn and he's stalking people. And he sees Salvatore Buscemi. He sees the name. He's like, fuck, eyes on. I got to hook up with the Salvatore guy. He actually
he's going to give me the Ginzo discount, he said.
And then I just hit the button. I said, Sal, you want to be on the podcast? And Sal goes, I would love to. And 6 months later, we're on the podcast together. We're shooting the breeze. Just the knowledge, the wisdom, the experience that Sal's been through a few market cycles. And I just thoroughly enjoyed the conversation with the Fed. I thoroughly enjoyed the conversation about politics, even though it wasn't political whatsoever. We're just trying to figure it in where it fits in the business realm. We don't care about policies. We want to see how policies affect our world. And to me, you said it was an honor and privilege. I think for myself and Jake, it's been an honor and a privilege to have you on this podcast.
Thank you.
And, calling the capital, don't be afraid. Get out there. Maybe not as much on LinkedIn, but make sure you get out there, you network, and you just meet as many people as possible. Sal, thanks for being on the show, brother.
Thank you, gentlemen. I appreciate you.
Gang, as always, we believe in buying deals for the long term. Think in decades. I'm Jake. He is the G Daddy. We make it happen. We'll see you next time.